Hi, everyone. Thank you so much for joining. We're really excited to get started. We're going to start in a couple minutes, so just hang tight. Thanks for being here.
All right, so I think we are in our final countdown. We'll get started in a few seconds. I see attendees are joining on a kind of a slow drip here, which is great. It's what happens normally. All right, so I think we'll get started. So welcome everybody. We're very pleased to have you attend this session of Links presented by Chainalysis. I'm Jesse Sparrow. I'm the global head of policy at Chainalysis, and I'm very excited to be joined today by Albert Forkner. Albert was appointed to head the Wyoming Division of Banking as State Banking Commissioner in 2012. And in this role, he is responsible for the supervision and regulation of all state chartered banks, independent trust companies, licensed non-depository financial entities operating, and the newly created blockchain/crypto-friendly special purpose depository institutions in Wyoming, which is primarily what we're going to be speaking about today. Mr. Forkner has over 22 years with the Wyoming Division of Banking, and prior to serving as commissioner, he was the deputy banking commissioner at the division, a position he held for 4 years. His experience also includes chief examiner and senior bank examiner at the division, and a state loan officer prior to that. He served as the chairman of the board of directors for the Conference of State Bank Supervisors from 2017 to 2018. So he's held a wide array of roles within the division, and I think your breadth of knowledge is going to be so important to the conversation today, Albert. I'm really looking forward to your insights and to the discussion that we're about to have. And additionally, I just briefly want to introduce Chainalysis to those of you that may not know us. We are the blockchain analysis company. We provide cryptocurrency compliance and investigation software to over 270 governments and businesses in more than 40 countries. Our data and analysis, education, and support create transparency across blockchains, so government agencies, exchanges, and financial institutions across the world can engage confidently with cryptocurrency. And our mission is to build trust in blockchains. So, Albert, I'm really excited for our session today. One of the things when we talk about links and kind of the inception of links and why we decided to kick off these kinds of events really did not have a commercial purpose, right? What we're trying to do is provide kind of educational resources and dialogue that are really going to support kind of the industry and this ecosystem to grow. And so with that being said, one of the things that I really love in relation to these kinds of conversations is speaking with regulators and bodies that have produced kind of emerging and new regulation for this space. because I think it's so important for the audience and for the public to learn more about this. And I think there's a real appetite for that. And so, I think today's session is going to be fantastic and really helpful in furthering that goal. So just want to welcome you before we dive into the questions. We have a lot of them today. And again, just to tell you, it's a pleasure to be here with you.
Thank you. Yeah, likewise. Looking forward to it. Thanks for the opportunity to speak with you. Obviously, a lot going on, a lot in the news lately about Wyoming. So happy to share some of the thoughts and a little bit of the history around all of that.
Fantastic. So one of the first questions to kick this off, is, Wyoming is now known to be one of the states with favorable cryptocurrency regulation, right? In part because of all the work that you guys are doing and the fact that you're welcoming this segment of the business, right? So in line with that, what is your approach to regulating crypto?
Mm-hmm. Well, yeah, as a state regulator, we have a couple things that we're responsible for, and that's ensuring a safe and sound, banking environment, ensuring that adequate consumer protections are in place, and but also allowing for opportunities for economic development, and that's kind of what separates us from our federal colleagues, is having that additional mandate. And so we're constantly wanting to make sure we strike a balance between all of those factors. And in regulating crypto and digital assets and how we were kind of thrust into that space over the last 2 years, this is a very similar approach. And one of the principles that I work under is the idea of right size regulation, and making it fit the level and sophistication and complexity of the activities that the institutions are engaged in. And definitely one size does not fit all. And in the crypto digital asset space, it's ever evolving, and it's evolving rapidly. And so trying to make sure that we have a balance of all of those things and done appropriately. And also making sure that we're not regulating through enforcement, or supervising through enforcement. That make the standards as clear as possible, and have open dialogue with the institutions of which fall under our supervision, and then trying to find ways to allow them to innovate without undue risk to the system or to their customers. And so that's kind of the approach we've been taking with crypto and digital assets.
I mean, some of the things that you just said really strike me, like right-sizing regulation. I was in a meeting with some senior government officials about, a year ago, and there was an executive from one of the very large cryptocurrency exchanges, and we were talking about kind of economic development and some of the potential hurdles that were being experienced. And one of them was specifically to your point, the fact that regulation and the lack of cohesion were putting this exchange and others that were operating domestically at a competitive disadvantage. And they certainly felt that way in relation to some international regulatory regimes, right? And couple that in with the complexities potentially on the state level, and it was even more problematic. The fact that you're addressing it and seeing that through that lens, I think, is so important. So next question that I'm sure the audience is going to be interested in is about the SPDI framework and how it's different from other states. I know we'll talk a little bit more about other states and how there's collaboration later on, but for now, can you talk a little bit more about that?
Yeah, absolutely. That's probably the issue that has, well, not probably, it has taken the most of our time and resources in my office. And the difference is it's really the first of its kind to blend digital assets into a traditional financial system. Now there's a number of differences there, as you noted. And so the SPDI, it got its origins about 2 years ago, really just trying to figure out how can blockchain companies and those dealing in crypto and digital assets, how can they maintain a stable banking relationship? Because that was one of the biggest challenges. And if they were able to obtain a bank account, they may not be able to maintain it. And so the idea was, hey, let's come up with something outside of maybe the traditional system that allows them to have a depository relationship. And so what that did is it took what New York did with their special purpose trust charter in 2014, 15, and kind of was the next evolution of that. That fell under a trust company regime, which is much different than a bank. And so said, well, let's do this under a bank structure. And so spent 2 years looking at it with the legislature, and my now general counsel, Chris Land, was the primary drafter of a lot of this, did a lot of research, reached out to a lot of entities. And so to make sure that we created, without question, a bank charter. So it is a state charter bank, but it doesn't have it doesn't require, I should say, FDIC insurance. And so that's the big difference. But we wanted to make sure that there were some protections in place, and so it's 100% reserved bank. It's not allowed to lend. And again, this goes back to the idea of, well, they weren't really looking for a loan product; they were looking for a deposit product and relationship. So that's really the what's foundational and what's different than the colleagues state and federal level. Really, there's no other charter. Bank charter that exists like this. Now, niche charters have existed for a number of years. You've got ILC charters, you've got national trust banks, and so there's the ability to do that. You've got niche state chartered banks, but they all have similar foundations, with requiring FDIC insurance and things of that nature. So that was the major differentiation in creating a bank charter that meets that definition of both state and federal level definition of a bank.
I mean, so first off, that's a great overview, right? Kind of in relation to the amount of strategy, strategic thinking, and your approach that you've taken. And I also think it's important more broadly and in a global context to reference the fact that in some ways you're an incubator for this, right? Because the issues that you're talking about in relation to access to banking and financial services for this industry is something we see around the globe, right? And the fact that you put a regime in place now and you're opening this up potentially has such a wider impact. It's really exciting. I think it's exciting for us. It's exciting for me to see what's going to happen. We're very confident that it's going to be successful. And so, I think that, it's just going to be great to see what's to come, in the near and long term. The next question, pivoting a little bit here, is what are some of the pain points that you identified that crypto businesses face, and how do you address them in your approach? And you cited some of this already, but is there anything else?
Well, yeah. So certainty or uncertainty, and really it's the uncertainty is the pain point, right? Now it was said by during I think it was a Kraken charter hearing for the SPDI that certainty, legislative certainty, regulatory certainty is good, but if it's bad certainty, I mean, if the regulation's not that good, okay, well, we're all certain on what it says, but it doesn't work for us. Well, that's not any better. And so, so the first point is, let's put something out there. Let's define what we're wanting to do, what the rules are, and then let's try to make it as reasonable as possible, as principles based as possible, but yet not so open that it just invites bad actors, illicit activities, a weak control environment, things of that nature. And so I think we've done that, but not that there's not things to improve upon. But I would say that is one of the bigger pain points. And the other one is, as we touched on earlier, is the integration of digital assets into the current existing regulatory and statutory framework. And that's a big hurdle too. A lot of the laws on the books in which these companies operate under are either don't address it at all, or so vague that it's hard to interpret, and you could get 10 regulators or 10 attorneys in a room, and you'd get everyone would have a different opinion on what it means. And so And that's not really new to the regulatory environment. We're always playing a little bit of catch up with technology and innovators. I will say the state system has tried to be an incubator of innovation, and with fintech, that's, that goes back to, think of the ATM. That was, fintech in its time, right? The idea that you don't have to talk to a person to get cash out, and things of that nature. And so that started through a state bank. So the same thing here is identifying, having conversations of what those pain points are, and also having an honest conversation that we're not always going to agree. There's going to be certain things that the company wants to do that, for various reasons either can't be done or not that. But starting to have some sort of clarity, some sort of certainty around how to operate and what the rules are, I think is an area that was faced, how to handle that in today's world in the U.S. That's the other one, and we could have a discussion about U.S. policy and crypto assets for another 2 hours, but operating in the U.S. and how you're going to be competitive here when other jurisdictions around the world, the regulatory bodies might be a little bit ahead of where we are. And so I think we're trying to address those as well.
Yeah, I mean, that makes sense. And, also to your point, when you speak to regulators, what they say is that regulation is designed to be flexible, right? When you're looking at legacy regulation, to some extent, if it's strong, then it will flex, right? And you'll have some bend there, and you'll see that. But circling back to the fact that I'm excited by this and I love this is, it's the fact that by building out this new framework, right, and application, you're going to be able to do that. You're going to be able to do that, right? And you're bringing in additional knowledge, and I think that's going to be really important for continued development. Because when we look at the velocity in which the technology is being applied specifically to this space, it's so rapid, right? It's unprecedented. And so it's just, again, it's so important. The next question is in relation to continued compliance, if you will. So, the question is going to be, how are you going to ensure your licensees are compliant after that license has been granted, after the initial steps were taken, after the initial audit process? How are you going to ensure continued compliance?
Absolutely. So, and just to give a little bit of background to kind of level set what the role of supervision is. But if you think of an entity that falls under regulatory regime at either a state or federal level, what does that mean? And so you'd start out with the statutory framework, right? And that's what Wyoming did by creating the SPDI and then set it out in law. Then you have the regulatory structure and framework there, and that's what are the rules of the road and how do they operate. And then the last one, and to your point, is the supervisory aspect. So what is the program that will ensure ongoing compliance? And that's what I talked about at the very beginning is making sure that you've got that right balance and the clarity that you need, the infrastructure in place, but you don't have a supervisory program that's so restrictive, so severe that it just stifles innovation and operation. And so that's the last piece that we're putting into place here. And that's something, again, that we could find doesn't exist in the US as far as a supervisory approach to digital assets and how the SPDI specifically, but has some broader application, how we'll verify compliance. And so you're right, you grant a charter. In some senses, that's while it can take 9 to 12 months to do that, it's kind of the easy part. It's complying afterwards. And so we have a manual that we're working with the Promontory Financial Group, which has been an excellent partner. Highly encourage people if they have questions in this space. That's definitely a resource to reach out to. But they've been super helpful, incredibly smart team that's helped us develop this supervisory manual and examiner work program. And that's the standard of which we'll measure them, probably every 12 months in ensuring that they're complying with it. And then that encompasses all things from BSA, AML, KYC to InfoSec, fiduciary and custody activities, you name it. And payment systems risk is another area that we'll have to do that. And so we'll evaluate those controls regularly. We will require ongoing monitoring, what we call offsite monitoring in the regulatory world. basically reporting outside the exam cycle. As you know, and was announced last week, we partnered with Chainalysis, and extremely excited about that. That's a super powerful tool for us as a regulator, because if you think about, okay, I've got to go in there and I'm in charge of making sure that the institution is monitoring the transactions appropriately and ensuring they're not, dealing with sanctioned countries, knowing bad actors, things of that nature. What is a bank regulator? How do you do that in that space with the tools that we currently have? And so Chainalysis is providing us that opportunity, and how we're going to use that tool, because some of the SPDI applicants are using that same tool, but it's an independent verification, very similar to what we do in a bank right now, or even non-banks. We do the independent testing to make sure that they're doing those things in place. And so we'll establish our thresholds, and we'll use that tool as part of our continuing monitoring process. And if we have issues, of course, we'll approach the institution. If we find activity that's questionable or highly likely illegal, we've had an open line of communication with the FBI. We're establishing that relationship. So I think there's some opportunities there. And it's just a two-way street too, because they can provide us with information, again, of known bad actors, things that we can input into our red flag monitoring, things like that. So, and then we'll do that. That'll be a regular ongoing process. And then we'll have our on-site examination, on-site as much as you can, the digital institution. But and that's the supervisory process. And like I said, we're about to complete that, and we've got a lot of interest from federal and state regulators, because as I said, we're creating something that just doesn't exist right now. So.
Yeah, I mean, two things there. One, in relation to keeping these licensees honest, if you will. Given our partnership, which we're also extremely excited about, and the capabilities that we can bring, and the data and the insights, there's essentially very few ways that these licensees would be able to operate and engage in illicit activity without you knowing. And again, I think that's also kind of unprecedented and important. To your point on kind of supervision, right? You hit the nail on the head. That as a source of reference didn't really exist. And that's a global problem. I have a global remit, and I've run into this across the board from FATF down, where supervision is still being kind of fleshed out, for lack of a better term. And so with that in mind, you may become a real source of reference. And, from what I know of the work that you've already done on that manual and the amount of time that you put into this, I think that very well may be the case. So we kind of just touched on this already, but why do you feel that on-chain transaction level data is important to adequately regulating cryptocurrency businesses? And what will you be doing with that kind of data?
Right. Yeah. So like I said, that's if you think about a traditional financial institution and they deal in just fiat currency, when we go in there and we review BSA, AML, KYC, and sanctions compliance, that we look at cash, CTRs, suspicious activity reports, things of that nature. What's the program that they have in place, and we test that. We actually do transaction testing and making sure that things were filed as they were supposed to be, as required under federal law. With the digital asset space, how would we do that? How do we do that? And even if we get a data dump from an SPDI of all their transactions for say the last month, that means nothing to me as I look at the transactions, and then maybe you see the wallet addresses, but what does that say? So this tool obviously will again allow us to verify that they have the proper controls in place to ensure that they are compliant with BSA and sanctions compliance there as well. But then, so what we'll do with that is again the independent verification. and we'll be running running it through the system. We've got working with the KYT and reactor, and so looking forward to doing that. And then once we do our testing that we need to, then the data will be destroyed in the sense that we're not holding on to a bunch of data either. So there's a lot of security controls and making sure that on our side as well. So that's the intent right now.
Okay. So the next question, there very well may be some other level regulators from other states on the call right now. And I think a question that might be top of mind certainly is, what are some lessons that you've learned from operationalizing the SPDI?
Well, a lot of lessons. I mean, it's a daily, talk about feeling like you're back in school again. And also realizing I probably should have tried to go to law school and get a computer science, computer engineering degree. That would have been very helpful for where I'm at today. But, when we started this process back in, March of 2019 is when the law went into effect. Like I said, we were having plenty of discussions before that, but that's when the rubber hit the road, so to speak, and realizing that, okay, we all of a sudden, we being the division of banking, got thrust in the forefront of a new bank charter was created, and what are we going to do with that? Because it's going to focus on digital asset and digital asset custody, an on and off ramp for crypto. So we started reaching out to a number of people across the country and actually around the world. And so we had discussions with the SEC, the CFTC, all the federal bank regulators. We were on the Hill talking because there were certain things being discussed in Congress, and reached out to some other states that had banks, traditional banks dabbling in this space or banking digital asset crypto companies. Built a team of experts, technologists, bank attorneys, practitioners, in the sense that a few of those institutions that are acting as custody of digital assets to help us develop the rules of the road. But then we reached out outside the borders of the U.S. and to talk with regulators in other countries that are further down the road than the U.S. and that we're trying to do things to integrate in a digital asset adoption. So we talked to the FCA in the UK, we talked to some folks from FINMA in Switzerland, reached out to the ADGM in Abu Dhabi, and on some countries there that had certain things and an experience with it, and said, okay, what do we need to be aware of? What can we do? And also to open the communication channels, because the next step with those agencies will hopefully be to pursue information sharing agreements. Now that we have Kraken has their bank charter and we'll be up and running before we know it, that's a company that's licensed in multiple jurisdictions around the world. And it's just good to understand how their operations may or may not impact our bank charter. And so the lessons learned really were to be very deliberate about how we structure what we talked about earlier, the regulatory and supervisory regime, to be very pragmatic and to be very open to ideas and not only from other regulatory agencies, but industry, quote unquote, as well, because we've got to make sure it makes sense, that they're able to operate, and that we haven't closed it down so much that, okay, the law's in the books, but in reality they'll never get operationalized. So that is some of the lessons I'd say that we learned there and continue to learn, and we'll continue to have those dialogues. And as the business models continue to grow and evolve, we'll have to do the same out of our office and really with my state colleagues and federal colleagues around the country.
So I'm hearing, you took an extremely holistic approach, right, with all pillars of the ecosystem. And kind of pattern that I see there is when you talk about some of the regulators, the international regulators that you solicited feedback from, you're talking about some of the more mature regimes, right, that have the most mature regulatory regimes for virtual assets so far. You're talking about FCA, you're talking about ADGM. We know have done more thus far and are moving into the more advanced topics, if you will, that apply to proper regulation and compliance. So it's interesting, and I think obviously is important, and hopefully, in relation to state level engagement, this is, I think, the first time I've heard of that kind of dialogue with the international regulators. So, a tip of the hat for doing that and kind of thinking outside of the box. You cited some of the federal regulators, and the next question pertains to one of them, right? There's been a number of announcements recently from the OCC, right, in relation to custody of digital assets, more recently in relation to stable coins, very recently, in fact. So the question really is, have you seen a reaction from other states in relation to those announcements? And if so, what has that been?
Yeah, well, again, another topic that we could spend an hour on, and we all know that about the fintech charter and the lawsuit from state of New York, and actually CSBS, Conference of State Bank Supervisors, which had filed one that was dismissed. And as you mentioned, I was chairman of CSBS a few years ago, so I know all about that. But you set that aside, really what the OCC announcement does, because the states have parity statutes. I think every state has that. So if it's a national bank is authorized to do it, a state charter bank has the same authorization. There might be a few things that they have to do through rules or regs, but for the most part, to keep it on the level playing field. So, and as you can imagine, I've been talking about these issues for a few years with my state colleagues, and starting probably about 3 years ago, and how we were seeing digital assets evolve and come into the state system. It was more on our non-bank side, but as it was creeping in the bank side, a lot of them looked at me like I was crazy and wondered, why is a guy from Wyoming talking about this? Because nobody else is, at least in the bank regulatory space. And so, and fast forward to where we are today, and all of a sudden they're calling for having meetings and whatnot. But what it does is it just highlights how this integration, and we have a dual banking system, and so when Acting Comptroller Brooks, and their counsel comes out with these interpretive letters, I think that the states look at that and say, okay, how applicable is this to me? And some of us have had, like I said, these conversations for a while. Practically speaking, Wyoming, when the law passed in 2019 that allowed banks to, it created the SPDI, and an SPDI is a bank under our law, and as I said, federal law, that allowed banks to custody digital assets. So we've actually had that ability for state charter banks in Wyoming to custody digital assets since March of 2019. And so if you think about that, 14, 15 months ahead of the OCC's announcement, nevertheless, the concept's the same. And the other thing we've touched on is the other federal regulators have been fairly quiet about this. We've had some discussions with federal colleagues. The FDIC, we're still waiting to see where they come down on this as far as being an acceptable activity in an insured depository. My guess is there's been a number of those kind of conversations that none of us will know about. But until that point is the FDIC and Chair McWilliams has been very open to innovation in banking and realizing the importance there. And so the states are doing the same thing and practically speaking also, how many traditional existing chartered banks, in the vast majority of the banks in this country are small community banks. 90% or roughly 90% are under $1 billion in total assets. And so will they have a desire to get into this space? Maybe not. Fast forward down the road when it's definitely full adoption of digital assets in banking, then sure. But today, I don't know what it really means for most banks. But the idea is to ensure that, or to make sure that there's a recognition of the dual banking system and the state's roles in non-bank activities. The states license all of the non-bank activities, and we're working on things to improve that, make it more seamless. But it definitely escalates the conversation. Brian Brooks has has done a lot in the last few weeks to highlight and bring a national voice to the things that we've been talking about, like I said, for 18 months. And so we actually reached out to the OCC a few weeks ago and just had a dialogue with their chief innovation officer. We've done that with all of these agencies that have innovation offices within them, because that's what we really are interested in is how can we as regulators continue to foster innovation at both the state level and the national level.
Okay. So the next question is, kind of framed around, if you build it, they will come, right? To the extent that you've put this together, and I think there are probably some questions around the types of applicants that you're seeing, if you can share a little about those types, and then B, now that this is here and that you've done the legwork, what do you think the ecosystem will look like in Wyoming in terms of size and the types of businesses this is going to attract?
Right. Yeah. So over the last 18 months, I talked about where we were building out the regulatory and supervisory regime. We were also having regular meetings. We've eventually stopped counting. We were tracking it for a while. We're well over 200 inquiries from people around the world, literally, about what's going on in Wyoming and what is this, new crypto bank, which is definitely not quite the accurate description of it, but it gets the concept. It's a bank that is open to cryptocurrencies and digital assets, but it's an on and off ramp. But anyway, so that showed us that, look, there's a lot of people having discussions here, and there's a fair amount of misinformation. Most of the inquiries, they didn't really fully understand that the SPDI is a bank. And with a bank, you've got a significant capital requirement, much more so than trust companies, and so that took a lot of people into that conversation. Others realized the amount of money it costs to get even through the chartering process. It can take a few $1,000,000 to do that. That got rid of a lot of them. So and then just access to capital. So what we got down to, though, and there's a few different business models. All of them, those are definitely around custody of digital assets. That is just a booming market right now. And so, and you've seen that, you see these companies and partnerships and announcements, whether it be out of New York and some under those companies. There's some trust companies chartered in South Dakota and Nevada that specialize in digital asset custody. But there's also not just that, but the idea of being a qualified custodian. And then that's a much higher bar in order to be deemed that. And so when broker dealers are looking for institutions that are able to do that. So that's where the business models are kind of circling around. Now, Kraken, of course, is a very large global company. Their focus is more retail, obviously, but they definitely have plans to try to get into the institutional level custody for potential clients, and so that's part of it. But some of the others, and so the only two that are public at this point are Kraken, which was approved, and then Avanti Financial Group, which is Caitlin Long and her team, and they're focusing on institutional custody, and that's going to be their goal. So less in the retail focus. Others behind that who are in various, we've got 3 or 4 companies that are in sort of the application drafting stage, and we're having regular dialogues. There's a little bit of mix of both there, but I would say, again, they all want to get into that digital, the institutional level custody activities. So I think also where does this go? I think it's got a potential to be somewhat like South Dakota was in the 80s with credit card banks. I think back then, if people were saying, why would a New York-based institution want to come to South Dakota for this activity, as a little bit of a head scratcher, and look at it now where most credit card banks housed out of. Same thing here. I think people think, well, why would you leave New York and or the West Coast, Silicon Valley, and go to Wyoming, which is a flyover state. And so that's why we're so diligent about doing things right, and making sure that, again, we don't invite things that give us and tarnish our reputation. but that are attractive. And plus, we've got a very attractive, tax structure, very business-friendly environment, and we're 90 minutes from downtown Denver. So we've got that hub, not it's basically in our backyard. So I think the hope is this will grow. Now, if all of the applicants that are active go through, I mean, you're looking at potential of 5 or 6 new de novo banks in the next 12 to 18 months. And that's the other thing people don't think about, and it doesn't get much news is, again, because these are banks, the de novo bank activity, most of us know that after the financial crisis, 2009, 2010, that activity just ceased for a while. And over 500 banks failed, and we're just now in the last few years starting to see some new banks being formed. To have a state form 5 de novo banks in a matter of 18 months is amazing. It's actually freaking me out a little bit. But I say that, and then we're building up our staff and have some resources there. But so I think that's the hopes, is that they'll come here, and with that, the ancillary businesses and the services that service businesses that support those institutions would grow as well. Think of the law firms, the accounting firms, audit firms, things like that. So I think that's the hope, and Kraken was obviously a very big first step. That was a little bit of the shot heard around the world when that was approved, and I think that says something for a company like that, with that reputation and with that footprint, to say yes, we're going to Wyoming, was pretty significant.
Yeah, I'd say so. And it leads us nicely into our next question, because we just talked about current and projected, maybe future scale, right? About what that's like. If we go to a more national level, right? The next question is, the Conference of State Bank Supervisors announced very recently that there is a new regime for money service businesses that will introduce the same rules and standards across 48 states, right? Which is the majority of the US. And the first part of that is, was and how was Wyoming involved in coordinating that? And how will this coordination and collaboration work next? And lastly, what advice would you give to states that are beginning to formulate their own regulation on this?
Right. So this is where crypto kind of first intersected the state system, and that was because of the money transmission license. And states were looking at that as, well, what is an exchange, a crypto? Are they a money transmitter? Are they not? Wyoming, that was actually one of the first pieces of legislation that led us down this digital asset adoption and blockchain adoption, was the express exemption of crypto transactions out of our money transmitter law. And this is where, they talk about the patchwork quilt, regulatory quilt. And I understand for the bank or the institutions, the money transmitters that have a national footprint, it is tough to get a 49 licenses plus the territories if you've got that big of a reach. But nevertheless, that's the licensing is done at that level. And so I have been a proponent. This even goes a little bit before my term as chairman in 2017-18, is the idea that, look, states, we've got to come together. There's a very big believer in states' rights and federalism, and this country was founded upon that. But yet you still have these institutions that have a national and in some cases global footprint. So what do we do to make that process easier, but maintain our sovereignty? And so that was a dialogue, and really my colleague up in Washington State spearheaded this idea of coming together, let's start with the licensing aspect, and see if we can get a more common licensing regime, a little bit easier and not perfect by any stretch. So I think we're up to over 30 states that have joined on to that initiative, that you apply in one state in what we call phase 1, and then the phase 2 states take, and 80% of the money transmission license laws are very similar. So they go to there, and then the states for the state specific stuff. So that was the first step. And then the next one that we talked about, and this is part of the Vision 2020 that we as state regulators adopted, I think in 2016, just prior to my time as chair. The commissioner from Texas at the time was chair, and the idea that, look, we've got this vision. I mean, we're at 2020 now, and we want to do things to make it more seamless across the country, and take away some of the friction within the system. But again, allow for states to have their own sovereignty. And so this is the next step, is to coming up with this one company, one exam concept. And the idea there is that you have a lead state go in there, and a number of other states participate. And those that don't participate are able to accept the findings of that examination and accept that as their own. So there'll be a few tweaks to the state laws that need to take place, but that's significant. You think of all these large companies, they can get 10 or more exams a year from various states. And I spent some time chairing a committee that coordinated with the CFPB. And so for the large money transmitter companies, we would do things jointly with them, or at least concurrently. But even that, these companies were in a perpetual examination mode. And it gets expensive too, because they have to pay for the cost of the examination. So that's the next step, the next evolution, if you will. And we'll work that out. And now we've got another committee that I'm part of, our legislative committee with CSVS is looking at finding a kind of a model law that allows for uniformity in this space. Now, we'll say the big sticking point, a sticking point is cryptocurrency, and where does that fit? And what do states want to do with that? And some have tried to avoid it and say, well, it's not clear in our law, so you don't have to get licensed under, and others it's expressly in or out. So we'll have to come up with that, and we'll have to continue to have discussions there. But that is the next step in getting, again, uniformity across the country that makes it a lot easier for these companies that are licensed in all of the states that have that.
I think that what you're talking about is eliminating some of the friction that I referenced at the beginning of the call in relation to what I was talking about with that exchange. And I think that is going to be extremely attractive to some of these businesses, and then in turn, economically very fruitful for the states, right? So, that's something that's going to be interesting to see.
And our approach there has been similar to, sorry, I didn't cut you off there. So in the mortgage industry, so kind of right in the height of the mortgage crisis, the states had kind of developed the nationwide mortgage licensing system. So there was a federal law that passed that said, hey, if you're a mortgage lender broker, you've got to be licensed, and if you're in a bank, you've got to be registered. So that was the federal law, but then it gave the states authority to go and basically examine to that. So you still have your licensing requirements at the state, but everyone now operates under the same rules in the mortgage licensing and supervision. So we're trying to do that exact same thing as Representative Heck, who I think is retiring from Congress this year out of the state of Washington, had come up with this idea. So we're working with the Hill on hopefully, a 2021 initiative, if possible, on getting this, kind of federal SAFE Act-like law that then the states have a law at the state level that says, yes, we will go out there, we'll have a similar requirements, the standards will be similar. And so I think if we can get that done to the satisfaction of all the states and at the federal level, then we'll have taken just one more big chunk of friction out of the system.
I always say that I learned, but I just want to reference, you can't necessarily see it. I'm actually taking notes right now. So, it certainly is true. My next question, and we only have two more, and then we'll try it up, I think, maybe for a couple audience questions if there aren't any. That's always valuable when they have access to somebody like yourself. But I come from the policy, from the AML, CFT, from the regulatory world, right? And one of the things that I saw recently where I identified there's a potential nexus, and I'd like to hear it from you, and I think the audience would as well, potentially, is last week FinCEN announced its final rule. It's also been called the GAP rule, right? And it puts minimum standards for anti-money laundering programs for banks without a federal functional regulator. And it goes into effect in November of this year. So my question is, will this apply to those seeking a license in Wyoming?
So the timing that we were chuckling internally, and we've had open dialogues with FinCEN for a while on this, for obvious reasons with the SPDI charter. But that was dropped, I want to say, the day before the Kraken charter vote, and we were trying to decide if that was a coincidence or not. And at first we were thinking that we were moving a federal agency, but then we realized that's probably delusions of grandeur. But nevertheless, yes, it would apply. There's two things that with that answer though is. Um, the SPDI, they can apply for FDIC insurance, and actually we're inquiring to the Federal Reserve, can they be a member of the Fed, like a member bank? That question's out there still, and we'll see what they decide on. So if they come under either, they seek and get FDIC insurance, or they're a Fed member bank, then you now have a federal regulator alongside with the state. But also before that, and again, I've been basically a career regulator, had a short time in the industry, if you will, as a banker, but most of my time has been there. And so I saw early on that there's some real risks here with BSA AML in digital assets. And in fact, that's the number one question we got as the law was being drafted, and now on how we're going to supervise this. We're very aware of ensuring BSA, AML, OFAC sanctions compliance. And so we expressly require the SPDI and state that they are subject to the Bank Secrecy Act in Wyoming. So we have that authority in place, but it's good to also have the federal backstop. And in fact, I was just emailing this morning with the FinCEN about, hey, let's set up a pilot if we need to, or just stay engaged on. We'll continue to report like we do with banks findings there. We'll do the same thing with the SPDI. So we're trying to see how we can make sure that that's a strong partnership there. But yeah, the expectation is that they would be subject to that.
I think that's helpful. It's good context, and the fact that you have that direct dialogue with Vincent is also, important, right? So the next question, and for anybody that's been following along for this conversation, they're probably already going to know the answer, right? But it's in closing, as the ecosystem continues to develop in Wyoming, do you expect other states to attempt to replicate the model that you've established and to open their doors to crypto on the horizon? And then following up on that, the next point would be, for this audience, now that this has been established, now that you're kind of in this driver's seat, right? What would you say? What would you tell them about your new regime? And what would you like to get out there? We're going to give you the platform, if you will.
Thanks. Yeah. So yeah, we've had a number of conversations, and what has happened is, there's like I said earlier, the state system, we're often incubators of innovation, and the reason we can be much more nimble when you're focusing on just the four corners of your state. It's much easier than, and I can appreciate that a federal agency, they got to think of national ramifications. And so there's a number of my colleagues that were interested and excited to see what was going on here. A few of them were just intrigued, and a few of them were scratching their heads as to why in the world do we think that this is a good idea. But we've had conversations with, I'd say, about 10 or so other states that a legislator maybe approached them and said, hey, I heard about Wyoming, let's do something similar. Or the state themselves said, hey, we're looking for opportunities, and we see this as maybe something we can do. So I expect that it's from coast to coast and border to border that the states that are inquiring it, small and large. But there's a lot you have to do to, you can take our law and you can pass the SPDI word for word, and that's great. But it's really the clarification and the nuances in the Uniform Commercial Code, the UCC, that talked about how do these things fit within that system, right? Because that's basically the plumbing of the financial system, if you will. My general counsel likes to say that, and is right. So everything's built upon that. So there's a lot of work there that they would have to do. So to get it right, because you want to make sure that you're jurisdiction is attractive, and so ours, it's very clear in law what happens in say bankruptcy, that you have an ownership right in the digital asset, that it's due back to you. The concept of bailment, what are digital assets? We've defined them under, that they're virtual currencies, digital securities, and utility tokens, and so a lot of those sorts of things need to be put in place. And so I think if they want to do that and that amount of legwork, then sure, it'll be it can be done and it can be replicated. The other one again is all of the other things, and where I said that after talking with our federal colleagues, it was kind of clear that I think we got ahead of them, and is the whole, okay, you've got this structure in place, but you've got to be able to supervise these entities. And so, and you have the resources to do that, and you've got to have the willingness to do that. And it's a lot of work to get that stood up. And so if they're willing to do that, and again, our manual will be a public document at some point, so people will be able to see what that is. And so I fully expect to see some of that at the federal level and other states, and that's fine. Again, we're just trying to create something here that others can benefit from. But that's another big piece, is you've got to do that, because just getting someone chartered and stood up and not making sure that it's continually operating safely and soundly and successfully, then there's some real risk there. So I think that they need to look at that as well. And that's a very, very important piece of it.
Fantastic. So I have to apologize in advance. I realized at the beginning of the session, this may be my fault. I didn't tell anyone to plug in any questions that they might have in the QA panel. But if anybody does have any, we could probably take one or two before we wrap. So if you want to submit them now, I'll give about a minute's grace period if we have anything come in, and otherwise we'll shut down. But just while we're waiting, we have one now before I go further. This is a good question. The question is, which states would you say are most likely to follow Wyoming if you pull out the old crystal ball?
Yeah, that's a good question. So Colorado had looked at it, and I think they had a draft SPDI bill last year. Now, I will say, actually, all the states, the pandemic, it disrupted the legislative process in states and even federally, but the states across the country this last year. So that's some momentum that states had. That slowed it down, but this whole Rocky Mountain region has states are looking at that now. Again, I don't know if it's because they're smaller and their legislators are more willing to look at areas to innovate and attract businesses, but so I could see something there. Tennessee has been a very friendly state to businesses. With California, they've got a blockchain initiative there. One of the things they called out is something like the SPDI. We've had conversations with Florida, again, another business-friendly state. So which one of those, I don't know. Really, at that point, it becomes the willingness of the legislature to do this, and like I said, to dedicate the resources to it. It's a heavy lift, and so. But those are the ones who've seemed very interested in what we've been doing. So.
Well, that lines up. We had one other question, but it was almost identical. It was a question in kind of the competitive state level landscape. But I think from what we heard from you, it kind of paints a good picture, right? We have one more. I think we have time for one more. And the question is, did this comprehensive push towards digital asset regulation originate with the Wyoming legislature or with the regulators, with you yourselves?
Actually, even outside the legislature, I'd say. So Caitlin Long, again, I think everyone listening under knows her, that she's a Wyoming native, but she got into digital assets early on. But she started talking with legislators, and again, there's a whole long story as kind of what led her to doing that. But the legislature drafted it. Of course, early on, I was trying to figure out, like a lot of regulators, well, how do we bring this into our existing statutory framework? It didn't make sense to me, and as we got to go having the dialogues, and I said, okay, well, let's embrace this, because I've always been in. So on this specific issue, no, I didn't come out of our office, but because I supervise small rural banks that can struggle to be competitive. I'm a big believer in innovation and fostering fintech and partnerships there, and so this is something that makes sense as this continues to evolve. But I'll give our legislators a lot of credit that not everyone understood what it was, but they were willing to listen and be educated and take a chance on it. And I think that's starting to pay off. And in fact, right now, as we're speaking, the select committee of blockchain, fintech, and innovation is meeting virtually, and they're discussing what's the next step. And before we jumped on this call, it was digital ID, and what does that mean, and how does that look, and what can Wyoming do to be a leader there? So the legislature has been very, I guess, forward thinking in this space.
Excellent. Well, to close, Albert, I can't thank you enough for your time. Obviously, given this conversation, we know how busy you are. I know how busy you are right now. I know that I learned a lot. I'm going to assume the audience learned a lot as well. And I think it's so important to have this kind of dialogue. And one of the big issues is access. And so the fact that you gave us your time, I'm so appreciative of, and I know our audience is as well. So thank you. So we'll have the recording of today sent out via email this week, and it will be up on the Links virtual landing page where you can check it out along with other past sessions that we've had. We'll announce additional Links virtual sessions on an ongoing basis, so please look out for more announcements in the coming weeks. And just to close, we're so excited for our partnership with you, and again, appreciate your time. So thanks very much.
Thank you as well. My pleasure. So,
great.
Take care.
Bye.